Welcome back. I'm Pratap here. Today is 2nd February 2024. So let us analyze the performance of high liquidity zones generated in our yesterday's report. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action course. I have provided the link to our training videos playlist, YouTube playlist, in this YouTube video description. So please go to the YouTube video description, click on the playlist. You will be able to access all the training lessons starting from lesson 1.1. All the lessons are available in an order. Please go through all these videos one by one and strengthen your skills related to demand and supply zone price action. I also provided the link to our Telegram channel in this YouTube video description. So please also join in the Telegram channel so that each time when I release the video, we'll be providing the update in that channel, or even any important updates also I will be providing in that channel. Now let us get into the analysis discussion. Yesterday we have identified 4 high liquidity demand and supply zones for the time frame daily and 75 minutes. So out of these 4, only one stock is executed. Even before that, look into this Nifty 50. So we have a supply zone, and this supply zone is pierced. And also by piercing this supply zone, this demand zone also got zone achievement. This is another important point you have to observe. And now this will become an all-time high demand zone. This is about an update about Nifty 50. Now let us evaluate all these zones one by one. The first one is Burger Paints. This stock already we discussed yesterday. We cannot, we are not in a position to trade in this zone because the price structure inside the zone is not good, especially at the 5 minutes. So we are predicting mostly this zone will be violated. It's not very convincing price structure. That is what we discussed yesterday. Probably even today's list also this stock will be listed because it is near to the supply zone. And next one is RBL Bank. So this is also a high liquidity supply zone. But see, when this zone is created, this is in the year 2020. March 2020, this supply zone is created, daily supply zone. But recently, prices entered into this zone. There we identified two 70-minute zones, 75 minutes zones. So let us get into 75 minutes time frame. See here, we have a ERC candle leg in, 3 base candles and a drop candle. That way we have one 75-minute zone and another 75-minute zone here. We have a rally candle, we have 4 base candles and a drop candle. And moreover, this zone is keep on testing. That means a lot of liquidity, especially rejections are there from this area. That means there is a very strong order flow in that area. Let us look into that. But these are all observations from 75-minute zone. And this 75-minute zone is a fresh zone. But we have to evaluate the structure of these two zones. So that is the reason why we have to go to 15 minutes time frame. Inside the 75 minutes time frame, here we identified 2 15-minute zones inside the first 75-minute zone. This is a rally, 2 base candles and a drop. This is a 15-minute zone. And another one is we have a drop, base, drop. 1, 2, 3, 4, 5, 6 candles are there. Suppose if you want to take this as a leg in, you have 1, 2, 3, 4 candles and drop candle. But even then, if you look into 5 minutes, the structure is not good. That's why I didn't fine tune. But what about the other zone inside this? So here we have identified a 15-minute zone. We have a drop, 1, 2, 3 base candles, and again we have a drop. But this is not a great leg out. But okay, a lot of move has taken place from this year. But inside we identified a 15-minute zone. See here we have a drop, 1, 2, 3 base candles, and again a drop candle. This is the 15-minute zone. Now let us look into the 5 minutes area inside this. And look inside this. We have all the base candles 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Because there are many base candles inside this. That's why the structure is not convincing. Lot of order flow has been, might have consumed all the supply here. This will be violated easily. So we don't want to take any trade in this area. But here, the other one, the one above, 15 minutes time frame, we have two zones. We have a leg candle, sorry, this is a ERC candle we can consider at 5 minutes level. See here, now you get clarity the moment I zoom in. This is a very, see, the range is very big. So this is a ERC candle as a leg in, then two base candles and a drop candle. And again you have a drop, base, drop. That way you can draw two zones inside this. And especially the first zone, drop, base, drop, lot of order flow is there within this area. And similarly, look into the other one. So here we have a ERC candle as a leg in, three base candles, and again a drop candle, the 5 minutes zone. And even in this zone, see the rejection just before prices are entering into this. Even here, see the rejection from here. Even here, and even here. That means a huge order flow is there in this area. So this is the one you need to consider. But anyway, prices did not come into this, but we have good 5 minutes area. This is the one, and this is the second one. So we can plan trades in any of these zones when next time prices are entering. So if you look into this zone, prices did not enter, but we have to see same stock will be listed in our today's report or not, because with compared to yesterday's close, prices moved a little bit down. But is that enough to catch our algorithm to find this stock? We will see in today's report. But anyway, RBL, we didn't get the trade, but the reason why I shown you how I fine-tuned this zone, just to let you know how best you are able to fine-tune your zones by using zone confluence concept, because we are doing all these things as per zone confluence, fine-tuning the zone. Because this is the skill you have to build. If you are able to identify the way how I am drawing these zones, that will be a good experience for you. Next time you will draw the zones and you will fine tune the right areas, and also you will find the where the real order flows are there in your chart, in our zones, especially at 5 minutes level and 15 minutes level. And next one is Ashok Leyland. This is a 75 minutes zone. See the open price itself below this high liquidity zone. That means we didn't get a chance to plan a trade in this zone today. It's violated. With the open price itself, the price came below this zone, far, far below this zone. That's why always we have to plan the trade only after the market hour starts. See the gap down. In case if anybody would have placed pre-orders before starting the market, because these are all the stocks near the zone, see with the huge gap. That's why I told you the volatility in the market is very high. That's why I told you till already I have specified in our Telegram channel. If I am not wrong, till 6th of this month, we should be very careful, especially during the open market, open hours and all. You may see some volatility because people will start analyzing and the budget related points, and they make some conclusions, they make some assumptions. Based on that, people's mindset, people's psychology will change. And we see a lot of volatility in the market because of that. Sometimes need not be the entire market point of view, stock specific. This is one classic example. See how it started the market today, and after that again how it recovered. This is the classic example. But anyway, we didn't get a chance to plan our trade, and moreover, the zone itself is violated while opening the market itself. So it's an invalid trade for us. And next one is Nestle, and here we got a trade. Nestle is a high liquidity 75-minute zone. Recently it is tested, and after testing, an entry buffer is formed just before the zone, the 5 minutes level entry buffer. Today prices did not enter, and moreover, inside the zone, I didn't find a good quality 5 minutes or 15 minute zones. So that way we cannot plan a trade, especially the 5 minutes level. Let me show you, before I explain the entry buffer, first let me show you how we fine tune the zone. Because this is a 75-minute zone, we have to get into 15 minutes area. The first opportunity is here. But see here the structure, the 15 minutes level. We have a drop, base, drop. We have a supply zone. And then next day, see with a gap up, this entire supply zone is violated. But there is no base candles here. Without a base candle, we cannot draw the zone. So that's why we didn't have a valid zone. Even 15 minutes level also same. Currently I'm showing you 5 minutes. Look into the 15 minutes level. Same is the case even with 15 minutes level. See here we have a rally and base candles at 1, 2, 3, 4, 5, 6, 7. Sorry, 1, 2, 3, 4, 5, 6. 6 base candles and a drop candle. A supply zone, 15 minute supply zone. But next day, see with the gap up, market is started, entire zone is violated, because between this leg candle and a leg out candle, there is no base candle. So we cannot draw the demand zone. So that's why next time when prices enter into this area, easily this zone will be violated. But there is only one chance. If institutions decide to create a new zone next time when prices enter, at the time only we get the opportunity, but not the immediate time. Now see, prices entered recently. A 15-minute zone is created, drop, base, rally, ERC candle and follow through candle. But the problem here is, if you look into 5 minutes, look inside this. Is there any 5-minute zone? No. We have a drop candle, we have a rally candle. And there is no base candle in between these two candles. So that means this 15-minute zone is not at all valid. Price structure is not good. Next time when prices enter into this zone, easily it will be violated. The only condition it won't be violated is if institutions create a new zone inside this. At the time only prices will move. Otherwise, the zone will be violated easily. Whether institutions again create a new zone inside, that is a luck based. So we cannot plan our trades based on the luck. Otherwise, we get huge losses. But what happened? Institutions, just before the zone, either you can consider this as a leg candle, leg in base candles, and a rally candle. That way you can plan. Or this candle itself is good enough to qualify as a ERC candle. So this can be used 5 minutes ERC candle. This can be used as a leg in candle, and these three base for 1, 2, 3, 4, 4 base candles and a rally candle. This is a 5-minute zone. This 5-minute zone is acting as an entry buffer. How can we say this is acting as an entry buffer? One is just before the rejection is there, prices, there is order flow is there. And recently see here, prices entered into this area. Again, prices enter into this area, there is a huge order flow. And today see again prices entered into this area and we got the entry today. But this is the target. Today morning it, see the rejection, huge rejection, and further moved up, but not good enough to reach this zone. After getting the entry, probably it might have need some more push to get into this. That is not happened. Otherwise, trade would have been finished in the first 15 minutes itself. But 5 minutes point of view, it's a very good push. Because we already got 70% of the profit we got by the time it reached. Expected compared to this target. Okay, after that prices again further moved down and again moved up and finally reached the target during the last 10 minutes of the closing session. But anyway, as per our high liquidity zones point of view, it reached the target. And that way Nestle has given 9,820 rupees profit, which is 5.6% return on the investment. That is ROI as per one future slot. Because always we calculate based on our future slot, especially return on the investments. But the point you need to understand, this trade is based on the entry buffer concept. Because I hope you are all aware of this entry buffer concept. We already discussed a long time, almost 2 months or 2.5 months back we discussed. Even recently means the day before yesterday. We have seen a trade based on the entry buffer. Again, today we have seen a trade entry buffer. If anybody still missed that concept, entry buffer video is available. I placed in the NeoStock terminology playlist. There you can find the video to understand how exactly what is an entry buffer and how exactly we have to make use of that concept for our trading purpose. At least one test we have to check. We cannot take directly here. This is the confirmation. Most of the time what happens, all these 5-minute zones before entering into high liquidity zone, they will be easily violated. It's not violated, prices moving means it is a confirmation that institutions placed an entry buffer before our high liquidity zone. Next time onwards, you can plan the trades. So that is what happened today. And it gave a very good return. So these are the high liquidity zones generated in our last report. Hope this analysis part will help you to understand the concepts and especially fine-tuning the zones. Because most of the time I will be completely focusing on this analysis part, fine-tuning the zones. By doing proper way of fine-tuning, you get a lot of profits. See, last video I explained how we got the profits. Nearly 49 trades we identified during the month January. Out of these 49 trades, 40, 43 or 41, I think 42 trades. In 42 trades, they gave profit. Only 7 trades are failed. And all the trades, failed trades, successful trades, if you consider everything, profit and loss, everything, if you consider, finally we got over 4 lakhs, I think close to 4.5 lakhs profit we got. All the details I provided in our last video, and also I shared the Excel sheet also at our Telegram channel. If you did not go through the last video, please go through, so that we will understand, in case if you are not really planning your trades by using high liquidity zones, you will understand how we are missing a great opportunity. See, this entire concept is a money giving concept. That is the reason why I am every day I am analyzing. I am doing after the next day, whatever the report we generate, next day I am analyzing. The reason is two reasons. Reason number one, you will be learning the concepts properly. Basically, from my experience, sharing my experience, that way you easily learn the concepts rather than you struggle a lot. You get profits, you get losses, and finally you realize, and then slowly you improve your knowledge. That is one way to gain the experience. And another way is you can gain the knowledge from other experienced people's knowledge, how they are fine tuning the zones, the exact order flow, how we are identifying. Those techniques you will understand and you will follow. That way you will get the success. So basically my intention is to save your time. That is one goal. Second goal is, it is a proof how our high liquidity zones are performing. Because every day we are recording the video, analyzing the previously generated high liquidity zones and how they worked in the present day. Every day we are analyzing. So it is a proof. At any point of time, it is a proof that describes the performance of our high liquidity zones. Hope you understand the importance of the high liquidity zones, especially daily time frames and 75 minutes time frames. Now again, let us meet again in our next video. Hope this analysis part will be helpful to you. Thank you.